Why did the tomato turn red? Because it saw the salad dressing. Well, that's how most of us feel when we see our tax bill, a tad red and a bit embarrassed. Welcome to Modern World Dynamics, where we tackle the taxing issue of saving money. You see, taxes are like that sneaky cat that pounces on you from the shadows. You know it's lurking somewhere, but you're never quite ready when it leaps. And who can blame you? With so many rules and regulations, it's like navigating a maze blindfolded. But what if I told you there's a way to make this maze a little less daunting? A way to keep more of your hard-earned money in your pocket rather than Uncle Sam's? It's all about planning ahead, my friends, year-round tax planning to be precise. No more last-minute scramble on tax day. Think of it as a game of chess. You wouldn't charge your king headfirst into battle, would you? No, you'd strategize, make calculated moves, and protect your king at all costs. That's what year-round tax planning is all about. Protecting your king, or in this case, your money. Now, I know what you're thinking. I'm no tax expert. How am I supposed to navigate this complex world of tax planning? Well, you're in luck because there are professionals out there who can help. Just like you'd hire a coach to improve your chess game, you can seek the help of tax professionals and financial experts to guide you through your tax planning journey. But remember, it's not just about reducing your tax bill. It's also about avoiding nasty surprises on tax day. You don't want to be that person who's hit with an unexpected tax bill, do you? That's why it's crucial to create a tax projection and review your potential income tax beforehand. So, how about it? Ready to take control of your taxes and keep more of your money? Good, because we're about to dive into the world of tax-saving tips that can help you do just that. Now let's dive into these tax-saving tips, shall we? Imagine you're a squirrel, stashing away nuts for the winter. Your nuts are your earnings, and the winter is your retirement. Just like squirrels prepare for winter, we need to prep for our retirement. And one of the smartest ways to do this is by contributing to a retirement account. Picture this. Each nut you gather and store is a portion of your income that you've decided to squirrel away. You're not just securing your future, but also reducing your present taxable income. Sounds like a win-win, doesn't it? Let's break it down further. When you contribute to a retirement account, you're essentially setting aside a portion of your income for your golden years. This income won't be taxed now, but later, when you withdraw it during retirement. This means you're deferring the tax on this income, reducing your taxable income for the current year. But wait, there's more. By contributing to your retirement account, you're not just reducing your tax liability, you're also investing in your future. Think of it as a double victory. You're paying less tax now, and you're building a nest egg for your future. And let's not forget, the more nuts you squirrel away now, the more comfortable your winter, or in our case, your retirement will be. It's like an insurance policy for your future self. You're ensuring that you'll have enough nuts, or funds, to sustain you when you're ready to kick back, relax, and enjoy the fruits. Or should we say, nuts of your labor. So, whether you're a young squirrel just starting to gather nuts, or a seasoned squirrel with a stash, contributing to a retirement account is a smart move. It's a perfect blend of tax savings and future security. So, by being a savvy squirrel, you're not just preparing for the future, but also saving on taxes today. Ever felt like a winner when you sold something for more than you bought it? That's capital gains for you. But Uncle Sam wants a piece of your pie too. Let's break it down. Capital gains tax is the tax you pay on the profit you make from selling an asset, be it stocks, bonds, property, or even your grandmother's antique vase. You bought it for a song, and then you sold it for a symphony. That's a win, right? Well, not so fast. The taxman has his hand out, waiting for his share of your symphony. But don't worry, there are ways to minimize this tax and keep more of your hard-earned profits. One strategy is to spread your sales over 2 years. Instead of selling all your assets in one go and pushing yourself into a higher tax bracket, consider selling half this year and half the next. That way, you can potentially lower your overall tax liability. Now let's talk about another strategy, transferring assets to your children or charities. Imagine you have a painting that's appreciated significantly over the years. Instead of selling it and facing a hefty capital gains tax, you could gift it to your child or donate it to charity. You sidestep the capital gains tax, and if you're donating, you might even get a charitable deduction, which can further reduce your tax bill. Let's put this into a real-world scenario. You've got this rare antique clock you bought for $100, but now it's worth $1,000. If you sell it, you'll have to pay capital gains tax on the $900 profit. But if you gift it to your child, you avoid that tax. And if your child sells it, they'll likely pay less in taxes than you would, especially if they're in a lower tax bracket. But remember, the tax laws are complex and always changing, so when you're playing the capital gains game, it's wise to seek advice from a tax professional. They can help you navigate the maze and ensure you're making the most tax-efficient moves. So play the capital gains game wisely and keep more of your winnings. Imagine your Santa Claus giving gifts and spreading joy, but did you know Santa could be saving on taxes too? Now you might be thinking, what does Santa have to do with taxes? Well, let me explain. Santa, with his gift giving, is a lot like charitable donations. When you donate to a charity, you're giving a gift that helps others and brings joy, much like our jolly old friend. But here's where it gets interesting for Santa and for you. These charitable donations could also be a way to save on your taxes. Now you might be thinking, how is that possible? Well, let's talk about a concept called bunching. No, it's not about getting your tinsel in a twist. Bunching is a tax strategy where you group, or bunch, your charitable donations from 2 or more years into one tax year. By doing this, you can itemize your deductions in the year you make the donations, and then take the standard deduction in the following years. This way, you maximize your deductions, and as a result, your tax savings. But what if you're not quite ready to decide which charities should receive your donations? That's where donor-advised funds come into play. Think of them as a sort of charitable savings account. You can contribute to the fund as frequently as you like, and then recommend grants to your favorite charities when you're ready. The best part? You get the tax deduction in the year you make the contribution, even if you decide on the specific charities later. So, in the spirit of Santa, consider making charitable donations. Not only do you spread joy and help those in need, but you also get the added benefit of potential tax savings. And who knows? Maybe Santa has a donor-advised fund of his own. After all, even Santa needs to be savvy about taxes. So, be a Santa, spread joy and save on taxes. It's a win-win. So there you have it, folks. 6 tax-saving tips to keep more of your hard-earned money. We've journeyed together through the taxing tale of taxes and discovered how retirement accounts can come to our rescue. We've played the capital gains game and solved the charitable donations dilemma. Remember, these strategies can potentially save you a good chunk of change, so why not give them a try? Your experiences and insights matter to us and the rest of the Modern World Dynamics community. So do drop a line or two in the comments section. Did these tips work for you? Do you have your own tax-saving strategies to share? We'd love to hear from you. Before we wrap up, a quick reminder to hit the like button and subscribe to our channel. Your support helps us continue to bring you more content like this. Finally, if you've ever dreamed of financial freedom and control over your life, check out our YouTube AI Masterclass. Learn how to make a passive income, grow your channel, and even quit your 9-to-5. It's all about working smarter, not harder. The link is in the description below. Until next time, keep saving and keep smiling.